Go ahead and introduce our guest today, an experienced tax lien investor. Could you please tell our audience a little about yourself, your occupation, and how long you've been investing in tax liens?
Absolutely. Michael, thank you for having me. I'm excited to be here, of course. Talking about investing is one of my favorite things to do because it's one of those things that, if you really think about it, it can be risky. You can lose money, but if you do it strategically, you can make a lot of money. So,
Yeah.
what I do every single day is I focus on, I have a couple businesses, but my main focus is teaching individuals how to use properly structured life insurance to invest in real estate. And the real estate that my clients and some of my limited partners invest in is commercial real estate and also tax liens. And that's in not just in the state of Alabama, but also throughout the country.
Awesome, man. Fantastic. So, can you explain what tax lien investing is in simple terms for those who are not familiar with it?
Yeah, so let me go through quickly now. So it's very difficult to give a broad spectrum of what tax lien investing is. A lien is simply just a claim to something. It's not describing real property, it's describing personal property. So when you go to a closing and you see a HUD statement and you see a deed being transferred over to a new buyer, that is a warranty deed. That is meaning that there are no claims to it, there's no clouds on the title. That person, that seller, is conveying a clear title to the buyer. There's no, again, there's no judgments, there's no clouds, there's no liens. Well, what happens with tax lien investing is an individual is able to purchase a claim to a property. So in the state of Alabama, and again, this is, I can't speak generally across the country because every state and even some counties in each state do their tax auctions differently. But in the state of Alabama, at least in Jefferson County, where Birmingham is, where I typically invest, what generally happens is every single year, let's call it, there's 50,000 households, whatever state that you're in. Um, Everybody that is a homeowner or a property owner owes property taxes. And so, what those taxes actually do is they go in and they're able to actually provide the services on the city. So that's how the city earns its income. So if you think about it from the smallest perspective, if the income of a city is $1 million, they earn their income from property taxes. And so they have expenses every year. They pay the school systems, they pay the firefighters, they pay the mayor, and that income is coming from property taxes. So that's how a municipality functions. It's basically their income is from property taxes. And so every year, if those 50,000 households don't pay their property taxes, well, now that city is working at a deficit. So let's say of the 50,000 houses, only 40,000 people actually paid their taxes. That means the city is now working at a deficit. There's 10,000 properties that didn't pay their taxes. So for the municipality to pay their bills, whether it's interest payments, the mayor, the school system, whatever, they hold a tax auction. Everyone's heard of this. You see people show up at the courthouse steps. You got all these bidders with the flag running around trying to bid on these properties. Well, Birmingham and every other municipality is they're all the same. They all do that because the municipalities, again, they have to be made whole. So you can show up there on the courthouse steps and compete. But the reason why people love this, hedge funds, teachers unions, all of these massive any type of investment funds love these tax liens, is because it's guaranteed income. Every single time that you go and put money, let's say the back taxes on a property are $2,000, right? And you go and personally write a check to the city and for $2,000. Now, you, again, like I said, you don't own that property now, but you have the very first claim to it. And what that means is that whenever that property happens to be sold in the future, or if there's a situation where um, you know down the future the owner of the property actually never ends up coming back and buying the property, you can we could probably get into this, but you can actually file for a quiet title and actually own that property. But what it comes down to be is that at the very end, you either get the actual property or you get your money back with a guaranteed interest rate. So that's why all of these massive funds love these investments. It's because they invest money and they're guaranteed to earn a return. So at least in Alabama, not getting too far ahead, but I do a little bit differently where you can actually remove the competition and kind of create a monopoly by working directly with the state, which maybe we can get into that. But from a general point of view, tax liens are not real property. They're just personal property. They're a claim to real property.
Hmm, that's interesting. What motivated you to get involved in tax lien investing, and what have been some of your key experiences in this?
The motivation was I used to play professional baseball, and I'm just a competitive guy compared to just like everybody else. Everyone likes to compete, and I saw this as an opportunity to have a competitive edge on the market, right? Because I saw something where, okay, I can go deploy $5,000 into something, and I mean, it's like a fork in the road. I either get the property or I get my money back with interest. I didn't really see a downside. And so I thought, okay, so I went to a seminar. I had a friend of mine invite me to one of these, and I just was pretty shocked by it. I was like, I'd never, I was a clear title guy. I had some single family houses. I had bought some properties. I didn't really at the time even know what a lien was. I didn't realize that when you go and borrow from money from a bank, I didn't realize that the bank put a lien on the property. I didn't know what that was. And so when this attorney that was doing this seminar described how this stuff works, I was pretty blown away by it because it was just brand new information. And I thought, okay, I can create an edge because nobody else knows how to do this. It's a very small niched market of individuals that know the steps and how to work this type of business.
Oh
And
yeah.
so I said, okay, well, man, if I can figure out how to develop a game plan and a business plan on this, I could really make some money on this. So I started to really study. I started to surround myself with other investors that were doing this. I put a couple attorneys in my back pocket that have done this before, and I started to build my team out to where then it's like, okay, I've got the system built up. Now, after I've got my team, now the next focus is buying the properties and then rinsing and repeating. And then whether we're wholesaling them, whether we're buying them and flipping them, whether we're going for the clear title, like there's so many avenues that you can take on this. But I think for me, I just discovered that there's an opportunity to create a monopoly just because there's so small amount of individuals that know how to do this. And if you're one of those small amount of people that actually does, you can take massive advantage on the market just because everybody else is uneducated on it.
Man, fantastic. I love it, man. I really
Yeah.
do. What are the potential benefits of tax lien investing for individuals looking to diversify their portfolios?
Well, again, going back to what I mentioned before is the one of the best points of tax liens is that you have guarantees involved. And the best part is the guarantee is the government, right? We always talk about, if you're watching CNBC, people talk about treasury bonds having zero risk because it's the government backing that bond, right? Well, this is almost identical to that. This is where well, not necessarily the United States, but it is a municipality of the United States that's guaranteeing you to earn an interest rate on your money. So again, if you go and depending upon what county you're in, again, I'm not describing California or New York. I'm describing Birmingham, Alabama. Right now in 2023, if you were to go purchase a tax property, you're talking about getting a guaranteed 8% return on your money. It used to be even higher than that. Now they're doing some weird de-incentivization. I don't really understand it, but it's now at 8%. It used to be 12. But at the end of the day, though, you're still getting a guaranteed 8% return on your money. And not to mention, too, the fact that it's a municipality, there's no taxes involved. So you'd have to go out there if you want to compare that to something, you're more likely than not having to go and earn out in the marketplace 12%, whatever that number is, you have to pay taxes on to net 8%. The same way you would get a guaranteed tax free net of 8%, at least in these municipality tax liens. So I look at it from the fact is if someone is trying to diversify themselves. There's a lot of different world. There's so many ways to skin that cat, whether it's real estate, whether it's stocks and equities, whether it's bonds. I just look at this as just another avenue to park capital where if you're looking for guaranteed income, you're going to get that guaranteed income. If you're looking for the upside of actually one day owning the property and being able to flip it for a much higher valuation in the future, you'll have that opportunity. But the best part is that once you make you write that